Hi there, Serial Trader here. I just want to do a check-in on the major US indices, as I think there's been a decent sell signal given off here as of Friday. And in the last video I explained I was just starting to build a bearish position here to try and take advantage of the expected pullback. And I made an initial entry somewhere in the high 3200s in the last video, and I ended up making a couple more entries and got my average into I think around 33.15 or so on the ES futures. So I'm short a few of those contracts, and so far that's been working out, certainly as of Friday. And now let me just briefly go to the ES chart here. Now I do have my stop just above the all-time high here at 33.3750. So I have my stop at 37.75. So just a quarter point above that all-time high. So at this point, a very small risk, potentially large reward. But let me just get back to that SPX chart here for a bit. So off that October low, and I still have this currently big picture labeled as a 5-wave thrust out of a triangle we did there, which basically went from May until October. That was a sideways triangle pattern. In this case, it was a running triangle where the B wave made a new high above the origin of A, but a triangle nonetheless. So after a triangle, you expect some sort of explosive move, and then you expect a large correction thereafter. And that's kind of the implications of the move following a triangle. So it looks like we have a very mature 5 waves up, and it looked mature for a while, but now since we're starting to get some selling pressure here, I'm going to tentatively label it complete here as 5 up for C of B. And now we're expecting, even in the most bullish interpretation, we're expecting some sort of retracement to a common fib level. And you can see, I mean, we just started. Literally, the selling just started on Friday. So even to get a 236, a 23.6% retracement, that will get us down to the low 3200s, 3224. And that would be the absolute bare bones expectation. I would suspect you get at least a 38.2% retracement, which comes in at 3150 roughly. That also comes into a prior high, so maybe a former resistance level becomes a new support on the way down. And then of course there's just the previous 4th wave extreme down here of one lower degree. That would come in closer to just below 3100. Also the 50% retracement, which is a common level even in a bullish scenario to retrace. That would be also around 3100, 3096. And then if we start going a little lower than that, then we might have something a little bit more juicy to the downside developing, but I'm not ready to go there yet. Currently, just anticipating the bare minimum of a retracement within a still bullish move, with the caveat that it might be a much larger correction down if I'm onto the right track here on the big picture, where we need a larger C wave down, potentially retracing, this entire move or more. But again, it doesn't matter right now. We're at the very early stages of some sort of correction. We haven't even met the most minimum of targets. If you look back here, so we had this huge move off that December 2018 low, and it was just unstoppable, or seemed unstoppable. But even so, when that ended, okay, you still got just about a 38.2% retrace, and that lasted about a month, okay? So you need to correct price, and you need to correct some time. So this sell-off, if it is indeed a larger degree sell-off, it should consume more than a few days. It should be at the minimum a number of weeks, and it should at minimum also retrace a certain amount of price, none of which even the most minor of levels we've reached yet. So I am expecting further downside from here before potentially setting up a nice buying opportunity. I mean, if we get, just bear with me here, if we get a nice corrective looking 3-wave decline, I mean, that's a buyable correction to continue this uptrend we've been in. I'd be all over that if that's how it develops, right? But we don't know yet. We need more data to determine whether there's going to be a nice buying setup here. I suspect there will be, but we'll see. But for now, if you want to try and make some money out of this market, I think the bias should be to the downside at the moment. So this is what I'm looking at here on SPX, and you can see we had these nice bearish divergences here on the daily RSI. Price kept making new highs, couldn't make a new high in RSI, so that was kind of a sign of waning momentum. That's what you'd look for at a turn. And now finally RSI is breaking down out of its range that it's been in, and obviously price is coming down alongside with that. So everything there looks nice. I'll get into the candlesticks here in a bit. But as far as ES, so I think there's a little more detail here as far as short-term wave labeling on the ES futures contract. So I've gone ahead and labeled this on the shorter-term time frame instead of looking at SPX there. Similar implications. So from the very top, which was 37.50 here on ES, I get a clean non-overlapping 5 down for this initial 1 or A down. This was tricky because it was very deep, but you can do an A, B, C up for a W, and you have an A, B, C, D, E for a triangle X, and then I'd have to go into a shorter time frame to label this wave Y subdivisions, but you got a quick little pop up of that triangle, wave Y, and importantly, a thrust of a triangle that also failed to make a new high, just ever so slightly. We went to 33.37, and that's just below the 33.37.50. So technically, you can still count at wave 2. It did slightly less than 100% retracement, didn't make a new high. Basically a double top by a half a point there. So either, yeah, 1 down or A, 2 up or B, and then 3 or C down, either complete or in progress here. And you can get a 1, 2, 3, 4, 5 out of it. Now it could keep subdividing a bit lower, which would kind of strengthen the case that it's a 1, 2, 3 and non-ABC. But if it just stops there and begins some sort of bounce, it's quite possible we just have an ABC down, although not necessarily going right back up to a new all-time high. It could be ABC down for an initial W, then you need an X, another Y down. You could get some complexity there. So even though it's not a clean 5 down, so far it's just 3 waves down, it doesn't necessarily mean that you're just going to immediately retrace it all and start making new highs. Possible, but given the other signals I'll discuss, I don't think it's the most likely at this point. So it does look like we have a fairly mature 5 down for this move, and it wouldn't surprise me to see some sort of bounce up if we're not already beginning that. But tentatively, that's the labeling scheme for now. Okay, so we'll get away from these charts, and we'll go to the thinkorswim candlestick chart. So here's some more bearish evidence. So we have a bearish engulfing candlestick here on the daily on SPX, engulfing 1, 2, 3, 4, 5 real bodies. That's quite a powerful signal. So the more prior real bodies get engulfed, the more powerful the engulfing signal. So in this case, it's 5. So that's a significant bearish engulfing candlestick. We also closed below the daily T line, which we haven't done in quite some time. So that's certainly a sell signal on the daily. On the weekly here on SPX, I don't think it looks as menacing. Basically, kind of just a little doji, but not a perfect doji because the body's a little large there. But really not a significant candle here on the weekly. Potential reversal candle, but not a powerful one on the weekly. But again, you'll tend to see it show up on the shorter time frame, such as the daily, before you get a strong signal on the larger time frame, i.e. the weekly. So that's SPX. And what do we got here? We'll go to the Dow Jones Industrial Average. So the Dow as well did a bearish engulfing candlestick, although it only engulfed 1 prior real body, also closed below the T line. So similar implications. You see the Dow had a little reaction there off the 20-day simple moving average. Not surprising to see at least a short-term bounce off that area. It wouldn't be unreasonable to go down and look at the 50. We almost got down to the 50 over here on this little sell-off. And this one looks like it might have some more juice to it, given how high and overbought we got. So it wouldn't be unreasonable to come down here around that 28,500-ish level on the Dow. And on the weekly for the Dow, I think it's kind of similar, not a strong signal. No, that's not it's basically an inside bar, just inside the range of last week's candle for the Dow, with a little bit of a bearish tilt to it. But certainly nothing alarming showing up on the weekly candles just yet. Dailies, though, we got a legit sell signal. Okay, on the NASDAQ composite, this is a fairly powerful signal as well. On the daily, swing engulfing 1, 2, 3, 4, 5. Yeah. Actually, no, I don't think we quite engulfed this one. So four prior real bodies swing engulf. So still a powerful bearish engulfing signal, and we closed just below the T line on the NASDAQ. And the NASDAQ has been the more powerful index to the upside. So perhaps it could have a larger percentage retracement as well. Certainly watching for that. But definitely a legit sell signal here on the daily, bearish engulfing. On the weekly, I think, again, nothing strong here. Looks more like a doji here on the NASDAQ on the weekly. So it could be a possible doji star reversal. Obviously need confirmation next week. Start trending down to confirm that. But certainly the daily giving the earlier clue here with that bearish engulfing. Okay, so that's the composite. And we'll go to the VIX. And on the VIX, we finally got some action. Didn't break prior resistance levels yet, but certainly a big day up in the VIX, the biggest day we've seen in a while. And we actually closed somewhat higher, whereas a lot of these spikes up in the VIX on an intraday basis closed much lower. So that's something. And you can see we did I'm not sure I believe in candlestick signals on the VIX necessarily, but we did do a bullish engulfing candlestick on the VIX and a close above the T line. So we got that on the VIX. So if volatility starts trending up, that's definitely at least short-term bearish for the indices, right? Now, one more thing I wanted to go through here was the VIX tool. And you can see for a while this signal's been in development. So we had the divergence between VIX and VVIX. VVIX was making new lows, VIX was not, making higher lows. Then last video I pointed out we had step 2 of the signal. VVIX got above its red moving average, started trending up. And then the next signal would have been getting below the blue moving average on SPX, which we've now done. So now we have a confirmed sell signal using this tool. So VIX is trending up, VVIX is trending up, SPX is trending down. Typically these signals, the good quality ones, produce a pretty decent sell-off. And so far we've only gone down, let's call it roughly 50 points or so. Maybe a little more than that, but you get the idea. There should be a lot more juice in a decent pullback. So I'm liking it here. We got the bearish engulfing candlestick. We got the VIX, VVIX tool giving a sell signal. We were extremely overbought. So there's definitely some things lining up. The wave count certainly implies some potential downside. So that's what I'm seeing here on the indices. I'm still short some ES against a stop just above the all-time high. I might get more active with day trading this stuff as well, and just hold on to that core position. Maybe tighten the stop up a bit here once we move down a bit more. But that's what I'm seeing here. I wouldn't be too quick to buy this dip. I mean, it's possible we just immediately start going up new all-time highs again, but I think the evidence here technically is suggesting to expect some more weakness and potentially look to make some profit to the downside. All right, so that's probably good for now. See what happens next week. Might do a Bitcoin video tomorrow, do an update on that. Some interesting things going on there. All right, Serial Trader signing off.